Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Stand by one moment. Trying to resolve some technical issues. Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I am having some technical challenges here. I am streaming from Costa Rica. I will do my best. Hopefully, infrastructure will be stable. Got a lot to go over today. Very interesting market. If you're visiting in YouTube, I just want to let you guys know that if this is unstable, which appears it might be, that I might have to drop out of YouTube. And if that's the case, the stream will be posted later this afternoon for your review. So welcome to Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. In addition, it is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars and a lot of additional education that is available to all of you in the Bookmap server, not only trading futures, of course, and order flow, but also large cap, small cap stocks, market maker behavior, algorithmic behavior, a lot of advanced ideas, and all that is available. And one thing I want to remind you of is there is the Bookmap Academy, which is available to all of you at no cost, and that focuses on coaching and trader mentoring, which might help you accelerate your development. All this is available, and I just want to give you a heads up because I think that might be one of the best kept secrets is that you can actually get coaching and mentoring. So something to think about. Also, the Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading, whether you're a newer developing trader or you're an old dog. Speaking of old dogs, we have several in the Trader Lab that I'm aware of. I happen to be one of them. I've been trading for 45 years, going on 46 now. Might even be 46. I'll have to look at a calendar, both professionally and out here with you. And our senior trader has 50 years. So, and he's still in there, and he likes playing golf. So welcome to the Trader Lab. Let's get on. We got a lot to talk about today. And if you guys have been following the stream, grab your pen and paper. I'm going to give you some statistics. But first, I do have to take care of business. And that is general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. But if we get into it, as Joan Rivers on Johnny Carson show here in the U.S. used to say, we'll talk. And this is what the 60 PDFs of structured trades look like in the Bookmap Discord Trader Lab community. They are ideas that I grabbed, you might say, to help traders develop trading plans. Most of us spend our times trying to, quote, look or create setups. Well, setups are not really what you might think they are. Trades need to be aligned with something called context, and that changes during the day and at any time. And when it changes, your trade plan, which you need to have, in my opinion, so you're not making it up as you go. This is not a video game. Your trade plan needs to adjust, and then you need to have structured trades that are already prepared, that you know what you'll do before the market ever gets there. So these are structured trades, and I'm not a vendor. There's no cost for this. I was getting a lot of requests for, because I was posting in the Bookmap chat many years ago, and traders were asking me, what are you doing? So Bookmap asked me if I wouldn't mind putting some of these together. So I did. So you can get a lot from this, but like everything, you have to reverse engineer these ideas. There is no plug and play in trading. I just want you to know that if that's what you think it is, you need to come to Trader Lab so you can actually understand the business you're trying to be in. And of course, past performance is never indicative of future results. Anyway, the link is in the bottom of YouTube. You can use that if you're visiting in YouTube, and there is no cost. Now, this is called as you guys know, I've been following the stream, volume profile. Now, what these are RTH candles, and yesterday's high, if you follow the stream, and you should be following these things every day because it's an ongoing story. If you find value in what you see in Trader Lab, then you want to be seeing the development of the auction, how it manifests itself, how it changes, and like everything, it's always random. So this was the high of the day yesterday, 97.75. It was our target for yesterday. Now, the other thing, of course, is nobody knows. Now, here's an interesting thing. Now, all this is posted in Trader Lab. Yesterday in the stream, and by the way, there is none of this I told you so stuff or I'm right, you're wrong. You can't think like that in this business. You have to think like anything can happen. Nobody's right. Nobody's wrong. It doesn't matter. The correct thing, at least the way I view it, and had to change my thinking, was alignment, not prediction. We can't predict anything, but there are some things that tend to repeat at times. Here's what I mentioned yesterday, and this is just from years and years of experience. There's a thing called buy the rumor, sell the fact. And if you probably, many of you have probably heard this. And if you haven't, what it is that the market always is looking forward. And of course that could change, but technically or theoretically it looks forward. So if the market is selling off and we're anticipating a news event, and today we're anticipating a major news event, and that is the Tariff Liberation Day, and which can have a substantial impact on global economies and, of course, the economy here in the U.S. So market's been going down in anticipate of this behavior, which potentially can be very, let's just say, destructive to GDP and everything else. So the market's anticipating that. Now, in the concept of buy the rumor, sell the fact, if we flip it around, sell the rumor, buy the fact, it can create the squeeze. So we know that, and that's just something out in left field. You can't trade it, but you need to be conscious of it. Now, so yesterday, this was the high of the day, and this is an auction-based level. It's called the micro composite low volume node. It's important to note. In yesterday's RTH, and this is yesterday's candle, this is called the naked volume point of control. It is the highest volume in yesterday's RTH session. And think of this like shopping. Wherever the high volume is, that's where the buyers and sellers agreed on a price. Now, if we extrapolate that idea and we look at this consolidation right here, which is just the last 3 days, too high, too low, right? And so we're auctioning. So that's what creates two-sided rotation. In these 3 days, the highest volume was right around 24-ish. So what does it say? Let's talk language. Yesterday, too high. Of course, up here, too high. Retail in yesterday's RTH, retail in the full 3 days volume. And this day before yesterday, we got down to 33 3/4. The high volume from the previous consolidation off the chart was 28. So coming down here, the target was here. We missed it. Too low. Then the target is up here. Too high. And then retail. So the market can rotate. I hope that makes sense. Now, statistics. Grab your pen and paper. You have to vet everything for yourself. And then I'm going to show you just a couple trades that I narrated this morning in ETH. When I say narrate, I'm educating. I'm not calling trades. It's a waste of your time. If you can't learn how to trade, what do you need to be in this business? The goal of Trader Lab is to help you build business. Doesn't mean you'll succeed. So here's some statistics. We're opening lower inside of yesterday's range, and we opened down here. And we're going to go into that after the stats. I'm going to show you a couple trades, and then we'll go into real time RTH by then. So taking out the previous higher low is an 85% probability. Getting to the ETH volume point of control, which is just like this, except it's from the last auction, which is the ETH. So this is yesterday's RTH. ETH has its own auction. And here's the other key piece. The ETH high was right there. So in the ETH, we came up here, and then we came down. Okay, so at the time in the ETH, this is too high. So it sets up the possibility of maybe coming out the bottom of yesterday because there's an 85% probability. Remember that. Doesn't mean it'll do it, but it seemed like it might do it. Then we have the previous close or settlement, 72% probability. The previous point of control, which is this, about a 70% probability. Taking out the ETH low, about a 65% probability, and taking out the previous low, 53% probability. So that will get you started. Now, before I go into the RTH here, I'm just going to show you a couple trades. I hope I'm doing okay in YouTube and Discord. I see that I'm having some trouble here, but I cannot tell what's going on other than I see some strange behavior. So this is at 7:15 Central Standard Time. This is a short. I'm going to show it to you. And this is the ETH low, which is not here yet. Okay, I don't think so. Oh, maybe it was there. There it is. Okay, so this is before we get. This is a buy sweep. This is a potential location. This is a high volume node, that micro composite high volume node around 24. So in a higher time frame, retail price, and remember, we rejected that yesterday's high in the ETH. This is a sweep. This is a structured trade. This is a trigger. The entry is here or here, and your stop could go right above here. This is the sweep. There's an entry. You can enter here or you can enter here, and the target is there. Now I'm going to show you the next slide, and these are just screenshots I want you to see. There's the entry. There's the entry. And the target is the ETH low, which is what we hit. And then we get acceleration up. I hope that makes sense. Are you guys tracking, by the way? How we doing in Discord? Are you guys able to hear me? And how we doing in YouTube? Are we doing all right? I cannot tell from here in Costa Rica what's going on. Can I get a screen and audio check in here, please? How we doing in YouTube, guys? Are we doing all right? How about Discord? Thanks, Cross. Discord, I need some response from you. I don't know if you're able to hear me. Okay, I'm going to keep going. All right, so now this is the RTH open, 8:30 Central Time, and we get to our ETH low, which has over a 90% probability, and then there's an 85% probability to take out the yesterday's RTH higher low. And I was, at this time, looking for this, and I had liquidity come in down here also. So you can see that. So let's set up the shorts. Okay, thanks. YouTube is good. What's going on in Discord? So let's get going here. I'm a little distracted, guys, because of being in Costa Rica. Things get strange, I think is a good way to put it. Let me try to get back here. Okay, so RTH open. Now, there's the ETH low. That was the target from the short that I showed you just a little while ago. And I think that, if I got this right, this is where the short was. This is the short. there is the target. So if you're in Trader Lab, and this is a structured trade, you can learn this. You would be short from here or there or even here to there. And that was the first target. You know, it is what it is. And that's just trading, guys. There's no secret sauce. But that specific trade, and I normally don't talk about these things, is about a 15-point trade, not including a scale. Anyway, those are always fun when they work. Now, this is like somebody threw a grenade in here, and it completely scrambled my plan for the short side. Yeah, guys, if you're in Discord, you can switch to YouTube if it's choppy, but it should straighten out. It kind of comes and goes. I think it's the monkeys swinging on the vine down here in Costa Rica. Now, let's get going. Let's get into the RTH. Now, when it runs away from me, and it did this morning, I'm quite okay with it other than the emotions it stimulates. It stimulates the FOMO, okay? Because it's almost like if you were a hunter and the prey runs away from you, or dogs. You know, dogs are triggered instinctually to chase something that runs away. That's why they run after cars and do all kinds of weird things. We have similar responses when the prey is running away. And you need to learn about not only yourself, but the things, the wiring that's under the hood that would make you impulse. The impulse is the wiring. And you need to really learn these things. It comes from intentional practice, live narration, and journaling. So anyway, this is our target, right, for the short, and then coming out the bottom, and this is sitting in here. This was very interesting. Now, you notice, do we actually come into this? No, we never touch it. That's the thing about liquidity. We just don't know. And for me, this trade, the short is still functional until we blast off. So let's look at this right here. This is the developing volume point of control. This is where the high volume is. So the RTH opens, we chop. If you took a short here, which you might, you have to come to the ETH low as your first target, which you would have got. So this is the first structured trade. Now, I always suggest in Trader Lab that this is the last place to trade because there's no structure. Now, the short that we referenced at the top of the stream that I was sharing with you was from the ETH around 7 in the morning Central Time. So, but if you took this trade, the risk of the trade, besides every trade has risk, is the opening swing high. Because if you get sellers here, it is not unlikely that the market could rotate up, take out buy stops that are at the opening swing, and then the move. So these are always very aggressive. And I always suggest to developing traders that you develop everything else first before you come here. Because you really got to have your stuff together where you have unconscious competence, because the only way you can operate in this is to be able to really not think about it, just react to it. These are just the kinds of things that you can learn in Trader Lab. And of course, you have to find your own groove and you develop at your own pace. So when this happens, it's, you know, that's kind of what I went. Now, here's what I know about these behaviors. And it doesn't matter what I feel. It matters what I do. And what I feel is that it's getting away and I feel I got to get in because that's my wiring. But it's not what I respond to. I respond to all the tuition I've paid to learn a lesson. One moment, please, guys. 1 second. Hold on. Sorry about that. So what I've learned by paying tuition is that do not respond to that. And it's kind of like taking a class. You know, take a class, you pay tuition, but do you want to keep paying tuition for the same class? You got to learn from it. So we all pay a lot of tuition to get educated in trading, one way or the other. So you need to, if you keep making errors, you've got to try to get a yield because you're making an investment, but you got to figure out how can you manage these emotional stimulus. Very important. So journaling, and I suggest to traders in Trader Lab that you get OBS software. It's free, and do live narration. And not only talk about the trade and the development of the trades and the condition of the market, but talk about how you feel. Are you feeling anxious? Are you, is the adrenaline running? Is your brain getting scrambled because drugs are being released into your mind? So this right here is the microcomposite volume point of control. It is the retail price in the higher time frame, if you will, the intermediate time frame. This comes in right here. But right here, if this is too high, we can bounce off it and come back, or we're going to take it out. Now, I am not someone who can say I know anything. In fact, I work very much on reminding myself I don't know. I know what might happen. I cannot know what will happen. So my job is not to know. My job is to get an alignment. This has to be part of your trade plan. When I start my day to trade, I have a mental preparation part of it. Not only do I prepare the numbers and the probabilities and take a look at the charts and the same stuff most of us do, I also have a trade plan where I know based on context, and that means the condition of the market, which is going up, certain trades, and you can see them in these 60 PDFs that I share, and this is at no cost in Trader Lab, plus a library of webinars. You can see all this. You'll see that what I do at least is, when I was first building this out, my trade plan, I have a binder. Well, based on certain context, certain trades, shall we say, qualify, and other trades don't. It's not plug and play. Everything is based on the condition. Why would you be selling this market? Well, for me, I really want to be buying it. So I'm looking for what's called continuation trades. My experience suggests to me that if I have confidence in my plan and the market runs away, my job is to manage my emotional states and wait for a continuation trade because it will show up somewhere. So let's look. Where does it show up? This is an advanced structured process in the Trader Lab right here. And let's look at it. I mean, there's a couple of these, but now this one, and what happens here is location, real estate, liquidity comes in the book here. Now I know when I come up here, if this is too high, I can bounce off it. However, I'm also conscious that we're going straight up like somebody lifted off a launching pad. So I'm not going to fade it. I'm trying to get in alignment with it. So let's look here, and then we're going to look here. I want you to observe this. This is how order flow can help you. Now, these are advanced structured trades. It is not necessary, and you should not start with these. If you don't have the other pieces in place, this is not going to be a pleasant experience. But this is something you can learn to understand. It's advanced order flow processes in alignment with volume profile as a chassis and the auction process. So if this is too high, and I see right here, selling icebergs, that's what this is, the liquidity. What's sitting in the liquidity? Sellers, passive. This is limit orders, icebergs. They're passive. They're saying, when you get here, I'll talk. Other than that, they're not interested. Buy stops coming up, selling ice, absorption. That I'm just giving you a little something here on what's going on, and liquidity. There's the bounce. Now, if we think the trend is up and we did not get to yesterday's low, let's remember the pieces, then what? I'm looking for a long resistance break becomes support. Now this, not so much. By the time a human can push the plunger. Once you're above this, and this is extremely aggressive, it's not a recommendation, it's just something you need to learn. Location, location, location from the top. It's along here. And there's your resistance. So if you got long, and by the way, I'm not saying anybody should even do this. I'm just saying is you can learn it. And if you can't execute properly, your job is just to hang out, work on your crochet until you get to the next location. Let's look. Look at this. Does this look familiar? Resting liquidity. It's been hanging out. Watch. Break through it. So resistance, break. Watch. Support, long, advanced process. Watch. Liquidity comes in the book. I often wonder, what are these guys doing? You know? So this here, the break, this is a long. Look at the behavior, see where it's happening. This is order flow. It's advanced methodology. Now, here's another piece to this. You see the seller here? That's Delta. Who is that? Who's doing the selling? Who do you think? Sell stops. Delta is aggressors and sell stops. So we're seeing the aggressor. And a stop is a market order. It shows up. So you guys who use Delta, you got to understand, if you're using Delta, you really got to understand what's in it. It's a combination of elements, but it's aggressors. Stops become market orders. They show up as the aggressor. So they're in here. But when you see an aggressor and then you see the buyers above the aggressor, here's what it means in order flow. Absorption. That means, let's look here. Absorption. Sellers are here. Buyers are above the sellers. They were absorbed. Break through the passive side. Sellers. And there's the iceberg. 54 sellers. Why are they selling? Who knows? I don't. Do you? Nah. Pull back. The buyers here who took these guys out are now, the buyers are here absorbing this seller. Where do we come down? I'm just taking a moment. I want you to see this. What happens here? 26 sell stops. Thanks for playing. Broker's going to send you a gift basket. Where's my buyers? They're here. If the market rotates down and if they were aggressive over here, is it possible that they might be aggressive back here where they were buyers? You see, under here. Now, there's no precision in any of this. If I put a trade on here, I'm no different than you. My teeth are going to chatter. Fear. But that's emotional response, you see. So let's continue. Let's look up here. What happens over here? Liquidity comes in. We break through it. Where is our support? It's here. Where would it fail? Where are the buyers? They're here. Now, again, advanced processes. Let's keep going. I would say we have a bit of a freight train, wouldn't you? By the way, if you have questions, please post them. I hope you guys are doing okay and that you're getting something from this today. Now, this is just a runaway train, right? Now, I do have some other trades I'm going to show you that are more, and these are out of those 60 PDFs. You know, Trader Lab is an advanced trading process. And it's a bit different probably than what most of you are, have been experienced or at least understand, because most of what we get at developing traders is indicators, because we think we get a software toolbox and it's got a bazillion things in there, and we go on the quest for time frames and indicators. That's normal. It's what most retail traders do. And unfortunately, everybody who's walked in your shoes has done the same thing. And most of them do not sustain a career in this business. So there's good reasons why, and there's good reasons that maybe you might want to consider, learn from their experience and your own, and then determine if you want to continue doing that. because we all have winning trades, which is the great illusion. I talk about this in the stream because it's what got me. Now, this is called VPOC migration. And you'll see in the 60 PDFs that there are structured trades built around this. By the way, the ETH mid has, I don't think I gave you this statistic, when you open lower in range, where is it? Brain is gone, you know. About an 83% probability to get there. Also, the, I don't know if we got there yet. Yeah, I don't know if we did. The ETH volume point of control has about an 84% probability, which might be above us. So this is called VPOC migration. Let's just look at it. And we have a structured trade in the Trader Lab called VWAP to VPOC. And we have a couple others that are going to come up over here. Let's just see. Yeah, the Pony Express is going. Is this the overnight VPOC? Let me look. Now this coming up here, if it's what I think it is, because it's covered up. No, it's not. This is the IB30. The IB30 at the first half hour of RTH, if we take out the first half hour's high, either side, there's a high probability we're going to take out the first hour's high. That's called the IB, initial balance. It's a market profile term, and it was created really because the thinking was most of the volume took place back in the day, you know, when I learned trading, you know, when we had floor traders, and this has about an 83% probability. When I learned trading, most of the volume ran through in the first hour. And the idea was if we could move out of the first hour's range, that meant that there was a higher time frame participant active in the market. That was the idea behind where this came from. But what happened was we started using statistics back then even based on certain behaviors. And that's where a lot of these statistics come from. And, you know, back in the day, as it were, a lot of this was new, but now a lot of this is out in the public space, the retail space. But they're still very usable because the market still does these behaviors. It's a bit different because we don't have floor traders, of course. We got algos. But it still doesn't change edge. And edge is still statistical. Now, what happens? No clue. Not important. Anyway, resting liquidity. Let's watch. Isn't this interesting? Now, the thing about this is nobody knows. VPOC migration. I actually should be marking these. Hold on a second. This is called the variable high volume node. And what this yellow line represents is high volume. Now, auction market theory, and whenever you hear the word theory, you probably think about Igor in the lab. But basically, auction market theory is a shopping thing. If you understand how to shop, which I'm sure everybody here does, then you might be able to put together the concept, because it's only a concept and it's based on the same exact thing that happens in the store. High volume is a retail price, and buyers or sellers agree to do business. If, for some reason, there's more volume here, it means that this price might be too low. And of course, the market can do anything. It could come down here and check this price. Is it really too low? And then come back here. Or this price can be too high, and it does the Acapulco cliff dive. Let's see what it does. How we doing in YouTube? You guys okay? So let's watch. Liquidity comes in the book. Now, this is a potential long here, right there. And what it would do is, if this is too low, we would come back here. It is a mean reversion trade. So it'd be a price check. I call this a price check in aisle 3. This is where the market comes back, checks a price, and if it's too low, boom. But look what comes in here. Liquidity. Now, again, with this, there's no way to know what the liquidity will do. If your trade plan says it's got to come here, you don't have a trade. You just go, well, you know, You do whatever you do. Now, this other liquidity is up here, right there. So let's remember where that is. Let's see what happens here. You get a spike down. Do we get to our level? No. And I don't chase the market. I just say, well, not my bus. Let's wait for the next one. Let's wait now. Now, this, how do you know this is going to happen? Me, no clue. I can't predict anything. I don't try. It's just the way it is. So when this behavior is going to happen, there's no way to know it will and where. That's the random nature. However, we have a structured trade now. I want to show it to you. And this is in the 60 PDFs. First of all, too low. I'm going to have to label this as the current retail price. Let's follow the yellow brick road together. Now this is in the 60 PDFs. The idea of those PDFs is to give traders something to work with. And every trader kind of finds their own time frame, if you will, or rotational behavior that they align with psychological. There's some traders that put a trade on near the low of the day and they'll go to lunch. There's other traders in here that'll, can trade whatever, For me, in this configuration, it's only longs at the current moment, and that can change. So this, we have a structured trade. Let's look where the location is. Here, I'm going to draw a little line for you. Remember, when it was here, I was looking for a long here. When it came down here, I was looking for a long here. No way to know. Where's my liquidity? First of all, my variable high volume node is here. Location, and my liquidity is in here. And then we have a structured trade called VWAP to VPOC. It's a long continuation trade. You can learn this if you're interested in it. And there's more. We break high. What does it say? Let's look at the language. Too low, price check on aisle 3. It's on sale here. If it's mispriced, we're going to move higher. The current retail price is here. I check it. Is this now too low? I reject it. VPOC migration. Let's follow the language of the market. You can learn this. I'm not saying you want to. You should. I'm saying there are traders in Trader Lab who are using this process, and they're moving their potential careers forward. And again, doesn't mean it'll work for you because you have to do work in the Trader Lab. Nobody can hand you a solution, but somebody like me with almost 46 years of experience can save you some time. And then again, still, it has to resonate with you. Too low, break high, VPOC migration. This is another structured trade. That's a structured trade. That's a structured trade. That's a structured trade. These are all longs in the Trader Lab. So you have all these opportunities for a long. And then you have to get risk neutral, manage your trade, and put your helmet on. It's the way it is. What was the probability of getting here? Those statistics you wrote down? I know. We always get distracted. 70% probability. Past performance not indicative of future results. Target. Now, I pointed this out in TradeLab. I said, "What? Look at this thing. It jumps in here, 800. It's like, what are you doing? Well, for me, I have a 70% probability of getting here, but I also know I can hit this like a wall and bounce off it. So, and this is subject to your own vetting. You can take your profit here, or you just say, nope, I'm going to hold. Now, there's another thing. And one of our traders in Trader Lab this morning posted, his name is Furs, and we were talking about where the stops are loaded. They are under yesterday's low and, of course, yesterday's high. And so ETH high low. So initially, for me, bearish in the morning, got to the ETH low, as I already mentioned earlier in the stream, and then off to the races. And I also mentioned to you guys that there's this thing about buy the rumor, sell the fact, and in the current situation, sell the rumor, maybe buy the fact. But again, it's not about being right. Nobody's got a monopoly on right. Watch. This is the ETH volume point of control. This was the highest volume in the ETH. This is the highest volume from yesterday's RTH. It sets up potentially a target here against this, okay? If I break above it and I get this one and I come back down, this might be support or not. Let's see. Sell sweep, buy sweep. By the way, buy sweep, counter rotation. Sell sweep, potential, and location. Remember, this is all location based. Everything happens all over the place. You know, the fact I see a sell sweep here, I'm looking for a counter rotation, but where am I? I'm nowhere. Buy sweep, counter rotation. Sell sweep, looking for a rotation. Sell sweep with location, reversal potential. Support, there. Sell sweep, potential rotation. Sell sweep, potential rotation. Sell sweep, potential rotation. Where are the stops? Higher. Hope you guys are getting something from this. And you're all invited to Trader Lab. There's no cost. It's available. Now, where's the stops? Yesterday's high. And there's going to be a lot of stops in there because it's the ETH high also. You definitely want to wear a helmet. Now, let's see what we're doing here. Let's look at something conceptually. This is one of the reasons why I threw all my indicators in a can, because I don't need them. I don't use them. And I found that they are actually, I was going to say, the problem, not the solution. And it's only my personal opinion, and yours may be different. It doesn't matter. I found that I was looking for certainty, right? Don't we all? We don't want to pay. Who would? We all want certainty and quote confirmation. That in and of itself is a message to you because we're risk adverse. So you start designing a solution to create certainty in an environment where it doesn't exist. So, and you don't have to take my word for it, but if you can accept we're in a gaming environment that's 100% random, you might want to consider designing a solution for gaming, because that's what we're actually doing. We're playing probabilities. That's called expectancy or edge. We're not predicting anything. We're trying to be in alignment and then use structured trades, or whatever you want to call them, whatever you name them, that have a statistical edge and only participate where that shows up. So this, watch, what happened over here at the overnight volume point of control? Support. Where's resistance? It's right here. Support, resistance, liquidity, pullback. Watch. So what happens here if this is too low? It's the shopping experience in fractal. Too low, too low, too low, maybe. This becomes too low. And there's another structured trade here I got to mention to you guys. It's called, remember, if the IB30, first half hour of trade, if we take it out, there's a high probability, and you have to vet these for yourself. It's in, all these statistics are available in Trader Lab. High probability, we're going to take out the first hour's high. And this is also a target. So, and since we have the Pony Express running here, and we have stops over here, this is with an 85% probability, past performance not indicative of future results. You see how you put the pieces together? We have a reasonable chance, 85%, of taking this out. And we have a structured trade in Trader Lab called the IB continuation trade. So we have location, structured trade, too low, maybe, stops, target, watch. So, overnight volume point of control. It's 9:30 is when the IB is locked in, which was set, let's see where it was, I guess right at 9:30. So wherever this is at 9:30 is the first hour's high. break high, that's called range extension, triggers the IB continuation trade. Now you got to find a way into this thing. What do we know? Well, we know that might be too low. So, and what's under here? Support there and there, and we're going for this. So let's just see how this works. Target. Everybody with me? These are structured trades. Believe me, it's not, there's no holy grail. We all take stops. No way around it. Now let's see if we see something. Now I haven't seen any of this, so let's just follow structured trades. Very, what have you noticed? VPOC migration, liftoff. What have you noticed? Now we get a pullback to this level. So we had a pullback there, too low, break high, pullback to where? There, VPOC migration. Follow the yellow brick road. That's why I use yellow, by the way. Because mentally, early on, when I started developing this stuff, and this is a long time ago, actually it started by observation. It was like, why does it do that? Nobody was talking about it. When I first learned market profile from the guy who created it, Peter Stottlemyre, in I think it was 85 or 86, somewhere in there. It was licensed by CBOT, and none of this was part of it. So I started seeing stuff, and back then we didn't have volume. It was time-based, so it was different. But I still saw behavior, and I was going, what the heck? What does it mean? What does it mean? So you scratch your head and you think about this stuff. So VPOC migration. VPOC migration, north, break high. Remember, IB continuation trade right here, long into the stops. VPOC migration, long, north, and then manage your trade. And I think we're current. You guys have questions. This is Trader Lab. It's not the Holy Grail, but I believe if you come to Trader Lab, you could probably help in your own personal development. It's a great community, but it is not romper room, and it is professional. And, I have to say that if you're looking for a community that might be able to help you on your journey, I think you can gain a lot from Trader Lab, especially there's no cost for this, and there's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow, with a high tier tool like Bookmap, and a lot more. VPOC migration. Now, the thing about developing volume point of control, so you understand what it is. The market can do obviously anything. So let's remember that. The fact that this is marching up does not mean that we will continue going higher. If this becomes too high, the market can either reject it or go into rotation and start something called mean reversion. So it'll come outside and then come back to it. That's one possibility. And in an uptrend, which I think we can agree we have at the moment, the trades that would qualify until the structure fails is outside in, because those are long continuation trades. So how do you get into a market that's, on the launching pad, and actually it's already launched, is outside in, outside in. So if you're not already in this, you have to manage your emotional state and have faith that you will get an opportunity. And you just have to have your plan out there. Here's the other thing. If you actually look at this as a business, your job is not to be a gambler. Your job is to leverage your opportunity off the gamblers, not participate with the gamblers. And because of our juices, our chemicals in our brain, you wouldn't probably drive drunk, I hope. Don't trade drunk. And what's happening is you're seeking dopamine, the action. You're sitting here, you're watching the market run away. If you're not in a position, you got FOMO, You say, I got to get some of this. Your mind is thinking about, gee, I should have bought it here, if that's your plan, and you didn't because of fear and uncertainty. We all feel it, and we all are human. We all make errors. We just have to accept it as overhead and cost of production. We all take stops. You cannot be in a trading business and not take stops. It's not about right or wrong. The only way you measure yourself in this business is your trade plan, which if it's vetted, it has a statistical edge, not the outcome of the last trade. It's the overall yield, because we all pay bills. Gamblers get paid in the casinos, and yet because the casinos only play games with a statistical edge, they extract the dollars over time. You need to understand that, and in my trade plan, I have to remind myself, I have to put myself in a different mind frame when I'm going to trade. And I have a little tape that I listen to where I remind myself, of how I feel, what I'm going to feel, when I feel it, what I need to do, all this kind of stuff. It's like I give myself a lecture. I don't know. I'm just giving you some ideas because willpower is not enough. Hope you're getting something out of this, guys. Please give a like if you're visiting in YouTube. Support the channel. Subscribe to it so you receive notification when there's other interesting things for you to tune in and review. Visit the Trader Lab. Use the link down there if you're inclined. You're all invited. There's no cost. As long as this is no cost, I think the worst that can happen is you're going to come away with something more than you already know today. And remember what the Trader Lab is. It's a community of traders who've come together to leverage their collective experience. This is advanced methodology. It takes a team, really, to do the data mining, to come up with these statistics, to support each other, to develop structured trades and share them. And then, of course, you have to reverse engineer, and you have to vet everything for yourself. You have to believe it to be able to do it. Statistics make this tangible. When you are only working in an environment that's random, if you don't have something tangible to hold on to, what you've got is only emotions. If all you have is emotions, what are you going to do? How is that going to work for you? It's not a good solution. It doesn't work well. Now, I'm sure there's some out there who can manage their emotional states, but how might you get control over the lunatic under the hood? Fight and flight and all this thing. Statistics. That takes the emotions, which you're still going to feel, but allows you to grab onto something tangible, which is a statistic. If you don't have a tangible element, you only have an emotional element. And emotions are triggered: fight and flight, fear, greed, lunacy. And it's chemicals. If you can understand how your mind works, you'll understand you're under the influence of chemicals, hormones, all this other stuff. Statistics give you a tool to manage your emotions, because now, in spite of what you feel, you're not responding to feelings. You're responding to your trade plan, and you can open your trade plan. And this is what I had to do. And I'm not saying it's good, bad, or indifferent. I'm saying I am. We're all the same. We're all human. I had to figure out a way to control emotional states, and I couldn't do it by willpower. I mean, we all think, how many times do you said, I'm not going to impulse, I'm not going to bail out, and yet you're sitting here in the moment, the chemicals are flowing in your brain, and you get a counter rotation, and you hit the plunger, and you bail out, only to find that it never would have taken your stop, and the market goes on for another 20, 30, whatever, or nothing, whatever it does. But sometimes you bail out, and the market goes down and would have taken your stop. That reinforces behavior that is not statistically valid. Now your mind is going to remember and reinforce behavior that over a sample size actually has consequences for you. I mean, this is how we work, it's kind of Pavlovian in some ways. So statistics are where you lean, and statistics give you better self-control. That's what Trader Lab is built on. It's the business. If you're interested, now, what's over here? Yesterday's high. What is out here? An outside edge of a consolidation. What are we actually looking at right here? We're looking at the volume here. So where might support be? Out here somewhere. Now, I don't know if it'll come out. Who knows? Clueless. However, there might be stops under yesterday's high, and this is an outside edge. Now, I'm breaking this down into something called fractals. If we pull outside and we find, and this is the retail price. Remember, everybody's willing to do business over here. Where's too low? Now, the magic, of course, of all this is nobody knows. But if I know that support, the buyers were here, and I know what's below is too low, and I rotate outside, this is called mean reversion. This is a structured trade in TraderLab. Now, the hard part about this, of course, is it's random. And where's the outside edge? Kind of joke about it in TraderLab. Mean reversion is mean because it's like trying to catch a falling knife. Where's the outside edge? Is it there? Is it there? Is it here? Let's talk about what is here. Let's see if we can make some sense out of this. Now, this, for me, when I put a trade on, I have to have range. And that means I have to get risk neutral. This is an obstacle because the market can just go, no, I'm not going to pay that, and go south. So this trade doesn't qualify to get long here. For me, might for you. But what do I know? I know my buyers are here. My buyers are here. Right here, I have buyers. That's what I know. Liquidity comes in the book, and there's no clue, no way to know, except buyers are here. See the iceberg? Buyers are there. Iceberg. Buyers are here. Okay. Support. But I don't know that. Don't you wish? Rotation. Now, what's this? This is something I discuss in TraderLab. I just want to explain this to you. This is a sell sweep. It is part of a triggering structure for me. I have no range. So let's assume for a moment, unless you have vetted and you will take this trade knowing that there's stops under here and that we can still come outside to here, that's your, as they say, business. For me, I just wait for trades that fit. I don't care. When you've been in this business, doesn't matter how long you've been in it, you're going to develop a perspective potentially that you can wait for the trades that have an edge and you avoid the trades that don't. It doesn't matter what happens here. This is a sell sweep that sets up a long. If it doesn't fit your plan, you don't have a trade. Outside, outside, outside. By the time you enter, you're entering up here. Your stop would need to be under here. This is not a structured trade. It is a trade. And where was the last place the sellers were active? It was right there. That's what creates the consolidation. Buyers are here. Sellers are there. Break high. Pull back. This is support. See it? Now, I'm not saying, again, that anybody should do this. I'm just saying it's something you can observe, screenshot, and ponder. And can you build something out of this? That's the question. The answer is up to you. There's no one way to do anything. I won't even say there's a right way. There's only a statistical way. So the whole thing is you would take these conditions and then you'd go back in time and you need to look at like 50 of them. Now, the thing about this is the context is roaring to the upside. What would happen if we're in a more rotational context? This wouldn't work. So maybe this is more of an outlier than it is something you can develop an edge with. When I say maybe, that's what you have to solve for. Where are the probabilities in this condition? And this might be an outlier. Does that make sense? How we doing, guys? If you're in YouTube and you're visiting, please give a like. It'd be very nice. And also feel free to review this stream and all the others. There's a full library of webinars in the Bookmap Discord TraderLab community, as well as also document section with trade plan examples, other traders' inputs. By the way, it's not about me. It's about the community. This takes a community of, because of data mining. We have traders in there who customize scripts for data mining. This material is shared, but you have to always vet things for yourself. By the way, I am streaming from Costa Rica. Infrastructure is really flimsy, so I hope that you're hearing me okay. Please give a like if you're in YouTube. Notice the liquidity here. Let's just watch for behavior. And let's look up the financial food chain here and see where our next potential target might be. Here. Now, it doesn't mean we're ever going to get there. I'm just saying that's where it is. Okay. And we have another area here, 5720. Where's 5720? It's right there. Got to throw this in here 1 second. And again, it's just a level. It doesn't mean anything other than that's interesting. Because what's more important, the way I look at this is, there's, the thing about the auction is it leaves levels behind. Well, let me get this. Hold on. 5720 is a high volume area. Let me show it to you, just so you could kind of see what this is. Got to label this. It's my job. So you see what I do. I kind of look at these charts. I put the levels on Bookmap. Plus, I'm using Investor RT, which exports the developing levels, so I don't have to be doing it all the time, which I used to do by hand. It's very cool to have some of this automated. I'm going to show you where this level comes from. This is the highest volume in this down day. It's right there. The stops are at 57.31. This is 31. So that's where the stops are. This green line is where the high volume was in here, and we left it behind. Nature of the market. And look what we did yesterday. This was the high of the day. That was a target yesterday. ETH high is here. We're now above this. Developing volume point of control, highest volume in this whole day so far, is up here. We are now moving away. That suggests the potential for here, here, and maybe squeeze up the financial food chain. So we'll see how this turns out. And again, none of these are recommendations. Nobody knows. So, that's why, when you have a trade plan, you need to have trade management. And we're not here to try to buy the low and sell the high. It happens, it happens. It's kind of like falling over, a winning lottery ticket. But most of the time, what we're trying to do is trade rotations in whatever fractal or time frame that you have determined aligns with your psychology. So here and there. Okay? That's kind of where we're going. And the market never has to go there. Are you guys tracking? How we doing in YouTube and how we doing in the Bookmap Discord Trader Lab? Do I see a lot of sell stops going off in this low volume area? I don't know which low volume area. Sell stops? Not sure. Ryan, what you're referring to? If you mean out here, well, these are what you're seeing. These are called distributions, and all a distribution of volume is a consolidation. Now, and when you have a thin area like this, it's called the low volume node. It's right there. Stops are going to be under here. That's what, and the acceleration here creates the low volume. So we have support here. We rejected it. Microstructure, you can see it there. If I come out here, I've got support here and here. So we're going to look right here. Let's just watch it. And these are not trades. These are structures. Now you can build them into something. And I mean you, I mean anybody. So high volume, outside edge. So let's just look at some of these microstructures and see if we can make any sense out of the language. Now, the fact that there's a low volume structure means two things. One, we ran through it and it's not auctioned, so the market can return to it. The other part is, where was the last place the buyers were active? It was down here. Sellers are here, buyers are here. Sweep, buyers were there. So buyers are here, buyers are there, sellers are here, sellers were there, sellers were there. Blow through them. Outside edge is now here. Support is over here. Sell stops are under the swing. This is the retail price in the developing daily time. And what can we do? We can come under here, come back here, or we can come here, come up here, or we can come down here and rotate back up here. Let's see what it does. The way I tend to do this is I know where the market might go. I don't know what it's going to do. So I'm not in the business of predicting. I'm in the business of alignment. So as I come to locations, I'm going to be looking based on my trade plan to get involved in the market. Where? Don't know. Justin, how icebergs affect price action? It's not consistent. So it's not a black and white thing where if you see a sell iceberg, you get short. It's just information. It's more the reaction. For example, here's 25 selling icebergs. Is that enough to make the market go down? Well, by the way, as they say, that's the tip of the iceberg, you know. So that in and of itself doesn't tell me the market's going to counter rotate. Now let's watch this right here. This is important, what's going on here. Let's just watch it. I've got a sweep. This is a sell sweep. We want to watch now what happens in here. You see the sell sweep here, reversal. I have a sweep here. Now, it doesn't mean it's going to reverse. Just means pay attention. Justin, that's a complex answer because it's a combination of elements and a priority of inputs. So what I think of when I'm trading is, what is the condition of the market? We want to be long. See, there's your sweep. This is your retail price. And what is too high? It's the high volume right in here. So I look at this right here as resistance. Micro, right there. Here, I'm going to put a little line over here. Let's see if we get back to it. Now I'm going to explain what we're looking at. Now this is trading in fractals. And the market never has to do anything. Remember, the market doesn't care about us. Why did the market come down from here? Because the buyers are here. And then if the sellers can overpower the buyers, we break below them. So this, in this distribution of volume, is now too high. It's like the retail price in this shopping or this store. Think of it like a store. Well, if it's too high in fractals, if this is too low, then where was the last place it was too high? It's actually up here. So the market can come back here. Or not, you know, don't know. So we'll see. It's not predictive, you know. It's always maybe. Maybe we'll rotate. Maybe we'll rotate. That's it, maybe. Let's watch the behavior together. This is trading in fractals. So some traders are going to get long here and do whatever. Manage their trade. This breaks down under here. Hasta la vista. That's it. Get back, go to the bar in the casino and have a cocktail. Or get the ticket to the buffet. Other traders are going to be looking over here and potentially looking at this and looking for a continuation long to come up here. That's what they're going to do if that's their plan. So let's watch. The other part of this, let's come back to the other part of it. There's more, right? Because it's only possibilities. Let's remember what we were talking about. Outside edges here. Stops are going to be under yesterday's high. If we pull out here, it's the same trade from out here. Outside in, mean reversion. What's this here? Outside. Here, let me come back. Mean reversion. Microstructures. This is fractal trading. So let's forget the range for a moment and look at the concept. The concept is outside from this retail price in a developing time frame back to a fractal or a microstructure that is actually the same thing. What we're talking about here is something called fractals, and the easiest way conceptually to get your brain wrapped around this is think Matryoshka dolls, the Russian dolls. They're inside each other. So if you're going to trade, or at least mentally think about the language of the market, it is not the indicator, which is up to you. I don't use them. What I use is what these participants are saying that I can interpret. I am interpreting that the buyers were here. The sellers took control and got into the stops here. I now have 90 stops coming out, and what else? There's a stop, 50, 80, 90, buy icebergs. There's your icebergs. There's my sweep. There's my resistance. If you have a plan for this, I'm not advocating anybody do this. This is it's advanced Trader Lab processes. And I can't say a lot of traders in Trader Lab will trade this. It takes substantial experience, and you need to be already proficient and profitable with the more broad strokes. And this is where this market might go. So the way it would work is, I'm going to take you down again into the sub-basement of fractology. Let's look. Look to the right where this is high volume. This is high volume in the RTH developing time frame, highest volume for the day. In this little structure, worth the sweep, my sellers are here. My buyers showed up here. How do I know? Only when my buyers are above my sellers. Then I get my trigger. This is a structured trigger in Trader Lab. And where do I come back? Right here. That's a long, if it's vetted. And where's my resistance? Here. There. Are you guys tracking? I hope you get something out of this. This is Trader Lab. You can learn this. And again, if you don't start with this, this is advanced. And when I mean advanced, I'm not kidding. But here's the thing. When you can learn the broad strokes, the structured trades, it puts you, and that's why I selected them, because once you understand, and this doesn't come in 3 months, let's get serious. You want to differentiate yourself from other retail traders' outcomes, you're going to have to do something different. And you also are going to need to change your beliefs if they don't work for you. Now, you can believe whatever's appropriate for you, because the only thing that can justify a belief is if it actually has a statistical edge. If you believe something, and even though you have random outcomes, because we all have random outcomes, we all have random winners, we all build processes that don't have an edge, but they still win. But over time, they lose. Let's think about it. Any game in a casino is going to have winning hands. If you close your eyes and had a random buy-sell generator, and you didn't know what it was going to do, you just get to push the button. That's all you get. It's still going to have winning trades, right? Think about that. If you can have winning trades doing nothing except maybe closing your eyes and pushing a random button, it doesn't even have to say buy or sell, just whatever. Doesn't that tell you something about what you're doing? We all have winning trades with defective processes. That's the problem. And we spend our time, and I have to tell you about this because I spent years. I don't know how long you've been doing this. I spent years trying to get things to work that worked randomly, and I thought it was make it better. You're on the right path. Look at that. You have winning trades. Let's figure out how to get more winning trades. I think that's pretty logical. So logic, but that's not the business you're in. You're not in the business of curve fitting. You're in the business of edge, statistical probabilities, and living in the world of maybe. Maybe it'll do this. Maybe it'll do that. Maybe I should only trade when I have a statistical edge versus making it up as I go, impulsing in, and trying to predict what the market's going to do. Instead, open your mind to randomness. Open your mind to how a casino operates, because they have a successful business model. What I share in the Trader Lab is how to operate in a random environment, same as the casinos. They have a proven business model. If they could predict the hands that are going to win or lose, for them, I'm pretty sure they would only deal cards that win for them. Wouldn't you? Well, if you can't, then what can you do? Only play games that have a statistical edge, and you will pay the gamblers. All businesses have overhead and cost of production. This is why I decided to do Trader Lab, because I went down dead ends for years, and I always had winning trades. I had winning weeks. I've thought, hey, I got it now, and then not so much. And I went from, doing this eyeballing at the building trading system so I could do it automated and do it better. I did that for years. Yet, in spite of it all, even with optimization and creating great statistics, it would always break down. So then I went on to think of a schedule of optimization, doing walk-forward testing. I was trying to still fix a process that really was defective. So eventually, and I mean it took a long time, the light bulb went off. And when the light bulb went off, I had to change everything. 5 years? Mossad, you are an animal. It took me longer than 5 years. Part of it had to do, there was no information when I started. We didn't have computers. There was no internet. I kept my charts by hand in the Stone Age. So I was at the other end. There was no information. The problem, I think, for developing traders today, anybody can go out on the internet and whatever, and everybody's chasing some illusion or the only thing you need. The reality of the trading business is it's like an apprenticeship or an education in a very competitive sport. It takes continual practice and intentional behavior modification, statistical data mining. It is beyond what anybody imagines this is. If you go out on YouTube or Instagram or any of those, you're going to find all this, only thing you need, and, blah, blah. Well, that was the case. We'd all do that, and, we'd all have ATMs in the basement. Doesn't seem to work that way. By the way, guys, thinking in fractals and think Matryoshka dolls, where we go from higher time frame to the micro. Can you see why this structure set up along and why this is our obstacle for scale? And then why we broke high and came back and tested what was resistance becomes support? Is this logical? Can you see it? 5 years, I'm telling you, if it was 5 years for me, I would throw a party. Where are we trying to go with this, by the way? And again, not a recommendation. Are you guys tracking? You getting something out of this? Please give a like in YouTube. Support the channel. Better yet, visit the Trader Lab community. There's a link in the bottom of YouTube if you're inclined. There's no cost. Trader Lab is not going to be here, and neither am I, indefinitely. I've been doing this for a number of years, and I cannot trade when I'm doing this. So you might give that some thought. So let's see. Let me show you the Trader Lab community, and I want to show you the library of webinars and the PDFs. This is what's going on in Trader Lab. It's a great community. It is not romper room. It's a disciplined community. It's professional. There's a lot happening here. Traders sharing ideas with traders. It's terrific. Choppy audio. Well, you got to put another quarter in the slot. I am streaming from Costa Rica, so that's part of the problem. I'm not going to be in Costa Rica. This is Rod, by the way. He's done a lot of data mining, custom software work that he builds his own stuff. He's a closet software guru, writes code, and contributes a lot to the Trader Lab, as do many others. So this is Trader Lab. This is what's going on. I post in here regularly. Everybody does. It's not about me. It's about you. This is where you come in. Take an active part. Ask questions. There's nothing we're all in the same boat. And it doesn't matter how long you've been trading. Just because I'm trading 46 years or 45 and a bit, it's not relevant. It just doesn't matter. There's no holy grail. So, well, what was that? Okay. So, Trader Lab. Okay. And here's what the webinars look like. And thanks, Ned, for curating this as one of our members in the Trader Lab. Watch the primer webinar. It gives you a high-level overview of what you see here. It's about structured trading and anchored inputs. Anchored inputs is consistent. The market is random. Something needs to be anchored. You can't measure it. If you have variable inputs, there's the old saying from computer days, early computer days, garbage in, garbage out. And that's why you still have random winners, but you don't have anything. You just have more randomness. If you anchor something so it's consistent, you can measure it. And that's how you derive statistical edge. So it starts with that. Then watch this one. Meet the Trader Lab. Are you curious about the Trader Lab? Watch this one. It's advanced trader education. That's what Trader Lab is about. This is not basic in the sense of a line crosses something and, something's supposed to happen here. And then I planned, I saw, I traded. This shows you a trade plan process, seeing it set up, and what the structured trades are. Then day trading, why most traders using indicators fail, and then trapped in Trader Groundhog Day. Trader Groundhog Day, I did that one because I'm talking about my experience. This is, I'm not saying it's yours. That's where you have winning trades and you think you're on the right track. You just have to make it better. Logical. But if it's a defective process, it'll always be the same. It will not get better. That's curve fitting and optimization processes. So when you go back and you look at the last 6 weeks or something and you throw your indicator over and you go, well, if I just adjust this, I'm just going to make it a stochastic, Cascade this, or I'm going to use my RSI or my Kel, whatever it is. Everything works at times. Fibonacci works at times. Elliott wave. I've gone down all those paths, and I don't spend a couple of months on something because I want to understand it, and then I want to understand why it works, when it works, and then I'm trying to figure out when it doesn't work and trying to solve to fix it. But what I found after doing that over and over with different processes, that I ended up with the same outcome, which was not so good, even though I had winning trades. So I had to step back and think about why. I mean, isn't everybody else using these indicators? How about everybody else has gone through those indicators? And most retail traders cannot sustain themselves in this business. I mean, I think the statistic hovers around 90% failure rate, maybe, according to what I read. I don't know what you read. So why does that happen? If they're all doing the same thing, then maybe we learn from it and learn from our own experience. And that is, don't do it. Figure out what doesn't work and don't keep doing it, and then try to find what might work. And that is really a gaming process. So here we are. Let's look at this. Liquidity is here. Sell gives you the upside rotation. The buy sweep gives you the downside rotation. We're still in a trend. And what is here? Stops. Do you want to fade this? Well, I can't give recommendations because this could be the high of the day right there, and we never get there. However, if you were, quote, a betting person, wouldn't you think that this is our target, right? And where was our last long opportunity? Not a structured trade, advanced process. It was right here. And remember, I don't call trades. You don't need to take my stops. I take them all the time. Why do I take stops? Because it's not about being right. It's about trade management, statistical probabilities, and just have to get over it. Every business has overhead and cost of production. You want to be in business, how can you not pay your bills? Does that make sense? Just ask. Ben, at what point will I start looking for shorts? I'm not going to look for shorts today because that's counter trend. And we get a very powerful environment. And remember at the top of the stream, and even yesterday, I said, one of the things I've observed over many years, and different manifestations, of course, and everything's random, is this thing: buy the rumor, sell the fact. Well, since we're upside down, you might say, it's sell the rumor, buy the fact. So the fact today is these tariffs are going to be announced at 3 p. Central Standard Time by POTUS. So we can see short covering. The other part of it is that, and I can't say for sure anything naturally, but unless he makes it up as he goes, which is possible, I don't know, there are those who know what it's going to be. And if that's out there someplace, there are actors, you might say, who already know. So, and everybody, is connected, and who knows, right? I'm saying I don't know. I'm not saying that's the case. I'm saying it might be. Doesn't matter. Our job is not to pick the high or low of anything. If we could pick the low of the day, I would have bought the low of the day, but I can't do that. So if I can't pick the low of the day, I certainly can't pick the high, and I'm not going to fade a trend. If the market reverses out of here and the trend changes, I have ways to get into it with what's called continuation trades in alignment with the trend, and those are typically mean reversion. But as far as when would I go short, I have no short. And if the market turns short and I don't have an entry, I can be done for the day. I mean, it's already been, looking at structured trades in TraderLab, you don't need a lot of trades. You just need the trades that have an edge. Long here, long here, long here. How many of these do you need? So short is not on my list, Ben. Now, this is suggesting a counter rotation. I don't fade it. What I do, and I'm not saying this is a good plan, I'm just talking about me. Back years ago, I used to flip-flop like a flounder on the dock. And I would trade long, short, long, short. I don't do it anymore because it's too much work. And I found if I get out of alignment, I might take a short, get 2-3 points, and miss a 20-30 point move. So I go, let somebody else do that. That's okay. I'm not in this for 2 or 3 points. I'm in this for range. So as long as the trend is up, it's by long continuation trades, and this is an outside edge, microstructure, right here. Anyway, please give a like. If you're visiting, thanks so much for visiting the TraderLab today. Use the link in the bottom of YouTube. There's no cost to visit TraderLab. Access the library of webinars, the TraderLab community, and a lot of additional education at no cost, which I think is pretty darn good. And join the community. And again, guys, please give the like on the way out. And thanks so much for visiting the TraderLab community today. I look forward to seeing you there. Say hi, introduce yourself. And thanks again, guys. And thanks for your patience with the connection here from Costa Rica. Talk to you guys soon.